fresh record highs, and of course, mid cap also in fine fettle, although it has underperformed the benchmarks slightly, but still no reason to complain. And earnings, of course, have also not been looking all that bad. But on that note, let me bring on board our next guest for today. Joining me is Nikhil Khandelwal, MD of Systematix Group. Nikhil, lovely chatting with you. First of all, very happy Diwali, and wish you a very happy Samvat 2082. Health wise, wealth wise, hope you prosper in the new Samvat.
You all and all your viewers a prosperous year. Thank you.
Thanks a lot. So let's begin this conversation, Nikhil. How have you been feeling about the recent leg of rally? As I was mentioning, the Nifty has rallied 1200 in excess of 1200 points, 5% or so in the last 2 weeks. The Nifty Bank Index, that leg of the market was not firing, but that has participated. We've had the Nifty Bank Index at highs. So although looking back, reflecting at Samvat 2081 wasn't really a very great or good year for equities in terms of the headline indices. There were individual stories, so to say, that saw good gains in the last 1 year. But striking the festive note at the right time, what is your sense? Do you think this will continue? Do you think it's just the start of a new leg of rally? What are your thoughts? How are you feeling about this leg of the move?
Right. No. So I think we have been quite distracted in the overall economy by the action which was happening globally. Primarily, as we have spoken in your channel as well, that the move by US on increasing the tariff was something which was bothering the market, especially the flows into the markets from the FIIs, which led to a significant amount of pessimism in the market. People were quite wary about how the export numbers and the manufacturing numbers from India will look like for the month of August and September. And I think as that data started to come in, people started to see that while there are challenges of export numbers going ahead, it wasn't that big of a hit to the Indian manufacturing ecosystem, Indian services ecosystem. What also happened at the right time was the government moved towards GST rationalization, and we are seeing the numbers come in right for the month of September, and now even for the month of October, the data from automotive companies, the data from e-commerce companies, the data from retailers, it's showing numbers in not just in double digits, but going as high as 50% growth over the last year, the same festive period. So in general, we were already in an environment of low interest rates, and now combined with GST rationalization, and is actually throwing strong data as far as Indian economy is concerned, especially from a consumer viewpoint. So I think a combination of all this is what is impacting the markets positively. We believe and have been telling that the markets should give double-digit returns this year, and we maintain that stand. This is a year of strong consolidation for markets. Despite a lot of global headwinds, I think India is constructively moving in the right direction, whether as a consumer economy or whether as a manufacturing economy. So that's broadly, is something how we are looking at, and gives us confidence that this rally and this uptick is there to stay.
All right, this rally is here to stay. But when you talk about 10 to 15 or double digit kind of returns, do you guys have any Nifty target for the next year, say by next Diwali?
No, we've been talking of this financial year per se, that this year, year on year, we should be about 12 to 15% year-on-year growth on the index.
Sure.
And I think till a month back we were at about 6%. So I think the index should give another leg of 6 to 7% in our view from the levels till last month. So till Diwali, we believe the consolidation in the markets will continue. We have seen the worst of phase as far as demand destruction, supply chain disruption, etc. is concerned. I think the only way up for the Indian economy is the only way I think is up for the Indian economy. Also, I think what we have been
Hmm.
seeing that this year has also been quite disruptive in terms of the government capex. The government capex has been one of the
Hmm.
weakest as far as the infrastructure is spend is concerned. So we believe that as things settle down, the government capex the momentum will also increase. So next Diwali, year on year, I think we are looking at a quite a strong move in a broader economic parameters are concerned.
All right. Okay. You expect a strong up move here on till next Diwali. But tell me, should portfolios be more tilted towards mid caps, or should they be more tilted towards large caps? Because on the headline index front, as I was mentioning, we haven't seen great returns. Do you think it's time for large caps to play catch up? And on that thesis, one should keep their portfolios more tilted towards large cap names?
No, I think definitely large caps are the ones where there is a lot more value to be bought into, and definitely if you are playing Indian automotive, you should be investing in the larger automotive like the M&Ms and the Tatas and the Marutis. If you are buying into the banks, and we've been telling that not just the large private banks, we should be playing it through the large public sector banks like the SBIs, the BOBs, and the PNBs and so on and so forth across sectors. I think the large caps have much more value going forward. So from a construct perspective, definitely going ahead from a year-on-year perspective, large cap should be at least 50% of the portfolio, as that will and that is where the value lies, and that's where more returns are there to be made.
Hmm. All right, got your point. Overarching themes. What do you like right now in terms of which end of the spectrum will do well? Manufacturing and defense, consumption. Anything that you prefer?
I think consumption in general will remain a strong theme. We believe that consumption at the medium to bottom end of the pyramid will be a much more stronger theme going forward. So we must play the consumption theme through value retailing. Yeah, we should play it through jewelers also who are actually having much more value retailing formats through companies which are in the dairy sector. So consumption as a theme, I think, should be played through some of these lower end of the pyramid kind of consumer names. The other part of the consumption theme which we like a lot is automotive, and especially in that also, I think bottom of the pyramid companies which are manufacturing and selling, trucks and tractors. So likes of Tata and Mahindra are our top ideas as far as automotive sector is concerned. We are also quite bullish on the larger financial services space. We believe that there is a lot more, there is a deep value sitting within the financial services
Hmm.
space, and within that pack, the PSU banks and the small finance banks are two packs which we prefer over private banks and general NBFCs going forward. And I think the last bit
Hmm.
is around the new energy themes. We believe that India is spending significantly on recycling. India is bringing the right policies to enhance our capabilities across solar, across other green energy themes. So, companies which are powering these sectors and these categories, whether in recycling, whether in solar, or whether in other new energies like green hydrogen, etc., have to be bought into. So there are multiple strong candidates which are within this pack as well. So again, these are the four major themes which we are
Hmm.
looking at: consumption, automotive, banking, and the green energy.
Fair enough. I was also going through Systematix Diwali picks report. I think TCS is among your Diwali picks. What did you make of the earnings and the aggressive AI related push that the company has announced? Also, the fact that HCL Tech became the first company to really declare AI revenues. What are your thoughts across the entire IT universe? And do you see a significant upside on TCS going forward? Do you think much of the bad news related to consumer discretionary spends, etc., and even the H1B issue. All these things are already in the price for some of these names.
Yeah, I think on the technology side, our view is that there is a lot of negative factors which are already built into the price. The second thing is that some of the larger names like the TCS, HCL Tech, etc., have been and have they work so closely with their customers on ground, whether in US, Europe, or other parts of the world, that they actually adjust to the need of the customers, whether it's on the AI front or any other digital transformation projects front, quite fast. While their base is quite large, and hence, the impact of earnings on of these new initiatives for them will take some time to play. So, from a medium term, we are positive about the companies like TCS more from a value perspective, while I think from a general
Hmm.
EPS growth perspective, from a general earnings growth perspective, we believe that it will be better played. The sector will be better played through the small and mid cap names. But having said that, as I was mentioning earlier, we are more better placed at this point of time to play value, and at this point of time
Hmm.
sits in companies like TCS. So that's why it's in our Diwali pick for the year.
Sure, got your point. Fair point. But what about these high growth names, especially from the quick commerce space? They've already seen quite a bit of a run up. Zomato hitting eternal, so to say, hitting fresh highs. Do you think that story, should not be looked at right now, given the fact that, as I was mentioning, it has already run up too much? And could there be more risks, with respect to cash burn going forward? Looking at the earnings as well from Zomato, what did you make, and how are you approaching the entire quick commerce play? High growth names, but would you say that valuation wise they are far too expensive, and right now is not the time to look at them?
No, no, not at all. We are, in fact, quite positive on the overall quick commerce space. We believe that the Indian consumer, whether for a 10-minute delivery or for a food delivery, and even now the entire restaurant sector is quite interdependent and on the quick commerce platforms. And definitely, company like Eternal is leading the way in most of these categories.
Hmm.
So we believe, from a general consumer theme perspective, or from a general digital transformation perspective, or from a behavioral change perspective, these companies are going to be significant representatives of how the Indian consumer theme will play out. And these companies are adding new categories, have learned how to launch categories and do it profitably. So we are quite optimistic about a general quick commerce theme, and Eternal is of course the leader in the pack. And we maybe because of the valuation which it trades at, we are not going overboard on it, but definitely from a long run, from a 2 to 3 year perspective, companies like these should be in our portfolio. After all, a couple of years
Hmm.
back, nobody believed that this will be an index stock, and that's where we are right now.
That's true. Nobody really believed it would be an index stocks, and of course, the company also turned profitable. So yes, cash burn also kind of came down, but let's see how things really pan out on the competition front. But one more theme, and that has been the theme of Samvat 2081. That's been gold. It has outshone equities by leaps and bounds. Best yearly gains since 1979. How are you playing this theme? Are you exposing yourself to this theme via gold loan companies, via gold, the jewelry companies? How are you approaching it?
Uh, No, I think gold as a theme, gold and silver as a theme has has gained more prominence, and has of course has been the best asset class over the last 1 year, thanks to again the global
Hmm.
macroeconomics which has been at play. As far as companies within the gold loan business, etc., I think they have reported, despite the prices going up significantly, they are reporting steady numbers compared to the last year. So from a demand perspective, looks like the demand has maintained from a year-on-year perspective, and because the price has gone up, they are going to show overall revenue growth. But we are not really getting too excited by this gold theme being played through through some of these jewelry companies, etc. We believe it is better played through companies which are producers or miners of gold, and I think the best platform for us at this point of time has been to play silver. Actually, has been Vedanta. So
Hmm.
Vedanta, through its subsidiary Hindustan Zinc, is a significant
Yeah.
producer of silver. And if one company which is actually going to show significant alpha on its earnings because of this run up
Hmm.
is going to be Vedanta. So that's our stock to play this theme actually.
Hmm. All right, got your point. Last couple of questions then. What are the top three mid-cap ideas for Samvat 2082 from your report? Nikhil, I would like you to list them out for us.
Right. No, so within the themes which I spoke to you about, I think from a dairy sector, we really like this company called Dodla Dairy. We think in the private sector it is one of the finest names as far as reflecting on the bottom of the pyramid and middle class consumption theme. The company is present across Orissa, Andhra, and increasingly in parts of Maharashtra and MP, and is also a very strong play on in Africa markets as well. Very strong balance sheet. So Dodla Dairy is one of our top three ideas within the pack. From a
Hmm.
from a recycling space, we like this company called Pondy Oxide. Company is the third largest non-ferrous metal recycling company in the country, is set up a significant amount of capacity to enhance its capabilities of recycling products beyond lead into copper and many other non-ferrous metals. The company is also one of the strongest in terms of the technology they use for recycling, and we believe that the company will register close to about 60-70% earnings growth for the next 2-3 years. And the last business is in the banking space. And as I said, we really like the PSU Bank as a space, and within that, the Bank of Baroda, in our view, is a very strong play as far as value and earnings growth is concerned. The company is expected to report double-digit earnings growth, double-digit advances, and at the same time has one of the strongest balance sheet amongst all the large banks put together, whether it's private or public. So that will be our third idea amongst the top three ideas from our Diwali overall picks.
All right, those are the top three ideas coming in from Systematix Group. With that, Nikhil, would like to thank you for taking out time and joining in. Always a pleasure chatting with you, and I hope to interact, more often in the new Samvat. But till then, wishing you, your family, your entire team a very very happy Diwali from the entire Money Control team as well. Have a great year ahead.
Thank you. Same. Wishing you the same. Thank you.
Thank you. Well, that was Nikhil Khandelwal.